Hi guys, today we're talking about some share reviews and we're going to be covering speculative shares. It's just a bucket of or a parcel of shares we're going to be looking at in this grouping. Just a random number of shares. As you can see here, a couple of them have got dividend yields and the others have got zero dividends paid only because of their poor performance. And I'm also showing the last date dividends or ex-dividend or paid, and then showing the profitability the 15-minute rolling 18-month chart produces, trading $2,000 lots of shares, and that's got highlighted there with the 0.2, and where it says zero balances, that means there's no historical data for that particular share. So let's go through each of these very quickly and just identify how they're performing. So for IOOF, as you can see here, there's not enough history for it, so it hasn't really performed. We're not really in the trade, although it's coming up towards a buy opportunity in the next few days or weeks, but this is very limited data. So IOOF in Australian Stock Exchange, not performing for our standards. So again, I'm just going to demonstrate how these should be performing based on our criteria. Next one I'll look at is Woodside Petroleum, and you can see there it's paying a healthy dividend. Let's see how the Woodside's showing up. And Woodside there, what I'm showing here is the top chart showing our trading strategy, and has performed $4,500 in profit so far. Closed out after a number of trades were accumulated in that period over the last, or the middle of the year, last year. And the bottom chart here shows the profitability. We just buy and hold the trade. So we're down about $500. Here we're up $4,500. Hence the table here. It shows here $4,500 for using the buy and sell profitability model versus the buy and hold. You can see here the other shares doing similar performance in their performance of profitability. Let's look at AMP. No dividends paid, but it's still making $1,100 for the buy and sell approach versus a negative $600 for a buy and hold. So AMP, again, we came in and out of the trade a few times during the buy and sell strategy. We're up $1,114. The buy and hold is in the red by about $600, $700. In other words, it hasn't returned a profitability yet. It's going sideways. Look at Flight Centre. So again, this is trading, although it's not really performing. It just hasn't met the additional buy criteria, and there's also limited data in the chart. So performance is very similar to the buy and hold strategy for the buy and sell. So that's not really working in our favour. Lastly, Boral hasn't paid a dividend because of its poor performance, although it has made a nice little, a few little gains of $1,800 in the period. So look at Boral on the Australian Exchange. So again, it's traded quite well. If you look at the historical performance of Boral, it's traded in and out of the stock, even though the stock price has been going sideways mostly and then down and sideways again. Whereas versus the buy and hold strategy it's still below our break even of $100,000. Here we've made $1,800 in the buy and sell strategy. So that's it for the moment in terms of these the first grouping of speculative shares. I just want to demonstrate how these picking non-performing, non-blue chip shares, how they perform. All right, that's this week's review of these particular groupings, and I'll review these again in the coming weeks. Thank you, and subscribe if you haven't already, and click the like button if you like. Thank you.